So welcome everyone. It's a pleasure to see you all today. And before we start, please allow me to do an acknowledgement of country. I would like to acknowledge the First Nations people as the traditional owners of the land on which this meeting is taking place today. See, I am in Brisbane, me aging. I recognize the country north and south of the Brisbane River as the home of both the Turrbal and Jagera nations. I pay these deep respects to all elders, past, present, and emerging. So, welcome everyone. My name is Camille. I am the founder of Bloom Impact Investing, and I'm so excited to see you all today. So before we jump in, please allow me to explain a bit what Bloom is for. At Bloom, we are focusing on the impact money can have in the fight against climate change. We are on a mission to make impact investing and sustainable finance easy and accessible. And part of this mission is to offer educational opportunities like these webinars to propel the voices of impact investing and sustainable finance experts like Jane today, far and wide. Since early this year, we have hosted several webinars. We talked about climate financial risk, how to measure impact, how to invest during COVID. We talked about natural capital, and our last event was about impact our superannuation can make. The aim of our webinars is to bring a community of impact investors and agents of change together, so we can build a greener, more circular and inclusive economy. Just a bit of housekeeping. I might ask all my participants today to mute their camera. Oh, Alexander, I've put you on mute, sorry. This event is supported by Impact Group. Impact aims to bridge the gap between Queensland's social innovation and impact investing sectors. Their goal is a thriving impact investment sector that fuels the growth of ventures solving real-world problems for future prosperity. So thank you for your support today. Now, the topic of today is one of my favorite. We will be discussing sustainable banking and whether our banking choices can make a positive impact. We have the privilege to hear from Jane Kern, Senior Manager Impact Finance at Bank Australia. So quick housekeeping. Please note this webinar is being recorded. The webinar will be made available to the attendees after the event. But fear not, unless you unmute yourself and speak, your video won't show on the recording. So don't be shy and let Jane and myself see your beautiful smile face. You're more than welcome to let your video on today. Please note, I have to do a short disclaimer. Please note that the information provided in this webinar will be general in nature only and does not constitute personal financial advice. The information has been prepared without taking into account your personal objectives, financial situation, or needs. Before acting on any information from this presentation, you should consider how appropriate the information is in regard to your objectives, financial situation, and needs. Finally, please note that this is a safe space, so you can ask any questions throughout the event by typing in the chat. Please indicate whether you would like me to ask the question on your behalf, but we will keep 15 minutes at the end for Q&As with the speaker today. Now, before we dive in, please let me share why I'm so excited about our topic today. I think we all do our best to create positive change, like switching to clean energy, buying organic food, or reducing plastic waste. It's a good start. We need to continue doing that. But we often forget that the way we bank, the way we use our financial services can have a huge impact and can be a big and significant part of the solution to the climate crisis too. And today I have the pleasure to explore this topic with a sustainable banking and impact finance expert, working within a leading organization that truly acts as a true trailblazer in the sustainable finance space, Jane Kern from Bank Australia. Now, before I hand it over to Jane, please allow me to tell you a bit more about her. Jane is Senior Manager Impact Finance at Bank Australia, Australia's first customer-owned bank. Recently, she has brought to market the bank's Clean Energy Home Loan, a mortgage that rewards customers who buy or build green homes or make ambitious green updates, backed by the Clean Energy Finance Corporation. Prior to joining Bank Australia, Jane worked at BASE, a Swiss foundation focused on driving investment in sustainable energy, and she also worked at Australian Red Cross. Jane holds a Master of Sustainable Development from the University of Basel, Switzerland, and a Bachelor's of Business and Communications from Monash University. So Jane, we are so excited to hear from you. But before your presentation, I'll say just a few words about Bank Australia. I think everyone knows about it, but just a few things. So Bank Australia started back in 1957. I don't know if you all knew that, as the CSIRO Cooperative Credit Society. So they've been here for a while. Fast forward to today. Bank Australia is an amalgamation of 72 credit unions and cooperatives. And as of the 30th of June 2019, the company's total assets were reported at 6.3 billion. In 2018, Bank Australia launched their Clean Money campaign. You might have seen it. The campaign was based on the idea that where people put their money can do good, not harm, to people and the planet. And recently, Forbes rated the world's best banks based on general satisfaction and key attributes such as trust, fees, and digital services. And guess what? Bank Australia came in at number 2 in Australia. So really well done. So enough with the introductions. And with that in mind, it is with great pleasure that I invite Jane to share her insights with us today. So over to you, Jane. You should be able to share your presentation now.
Great. Can everyone see that?
Yep.
Fantastic. Well, thank you very much, Camille, for the introduction, and thanks everyone for having me for the meetup group today. I'd like to start just by also acknowledging the traditional custodians of the land on which we're meeting today. I'm coming to you from Melbourne, so from lockdown 2.0, but I'm in Fitzroy in Melbourne, which is on the traditional lands of the Wurundjeri people of the Kulin Nation. So I'd like to pay my respects to their elders, past, present and emerging, and to just, yeah, I guess call out that as is the way now, we're all meeting in different traditional lands all around the country, so acknowledging the custodians too. Okay, so I'll get that happening. There we go. So I think today's session, Camille, has titled with a rather bold question: can your bank account save the world? And my short answer to that is kind of, which I appreciate is a little bit underwhelming, but I've got 40 minutes now to give you my long answer, which will focus on, I guess, how your bank account is part of a really big system, but also what power we as individuals have within that system, particularly when we collaborate with others. So I thought I'd start just by telling you a little bit about my background and how I came to two of my own realizations, I guess, about the power of money and people to make change. So back in 2013, I was living in Switzerland. I'd just finished a master's in sustainable development, and I was working at a foundation focused on climate finance. Now, in my master's, I'd majored in environmental economics, so I was very passionate about, efficient market-based solutions to climate change, like carbon pricing. And I just finished a, very nice little thesis on how businesses were responding to the introduction of the Australian carbon price. And spoiler alert for anyone who's not familiar with what happened to the Australian carbon price, but in short, despite it being a pretty well set up policy, it was became a big political issue, and it was, you know, revoked in 2014 when Tony Abbott, you know, came to power. I have accidentally skipped through my presentation. Sorry. Here we are. So, yeah, I guess at that time I was actually feeling a little bit down about how this type of national policy could be affected by politics. But at the same time, I was seeing things in my climate finance job that actually made me really optimistic. I was reading and then writing reports about just how much money there is in the world that needs to be invested, and working on ways to try to direct more of that money towards clean energy. And that's when it really hit me, like there's so much money out there, and where that money gets directed matters, and because what gets financed gets done. And it sounds a bit naive to me now, but I'd never actually really thought about my own money before. Like I'd used a bank and had superannuation, but I never really thought about what my money was doing. And it's not like I had heaps of money, but once I started to understand that money just wasn't sitting there in a pot waiting for me, that it was helping to shape the world that I live in, it made me start to go and look a lot harder at my own super and bank accounts. And at the time, I didn't necessarily see that would make a really big difference in this huge system, but I guess it was just more about a logical consistency in my actions. If I was spending all day trying to direct, you know, more money towards green stuff, I probably shouldn't have my own money invested in fossil fuels. So yeah, at my organisation, a lot of the work we were doing was on behalf of the international development banks, like the Inter-American Development Bank, for example, that's active in Latin America, who were trying to invest funds in energy efficiency projects. And what they really needed was to work with the local banks in the countries in which they're active, and have those banks set up programs to lend to these types of green projects. The banks had connections in their communities, and they had the ability to write loans. So with the right type of support, that they could actually be a really great way to channel funds into climate-friendly projects. And when I think about what made me optimistic, it's that all this was happening, and it wasn't as reliant on politics as things like carbon pricing policy are. But don't get me wrong, enabling policy settings and you know, certainly help. But lending or investment, I guess, are something that can push progress, you know, anyway. And so that was the big realization for me, the power of money to influence what gets done, and its ability to be a bit more independent from politics. And so when I moved back to Australia about 5 years ago, I was very keen to find something that combines sustainability with the role of money. And I knew of Bank Australia. I'd already become a customer when I went and did that, looking around for a bank that didn't invest in fossil fuels. And so when I saw a job advertised there, I took the chance right away. And I think what I've learned since being with Bank Australia is I guess a lot more about how individuals can combine their power to create change. Bank Australia is a customer-owned bank with a really strong focus on sustainability. So we've got 160,000 customers around the country, and our target market is very much socially aware people in Australia. And so when I joined the bank, I was really attracted to the chance to work on great sustainability projects, like developing our approach to renewable energy, switching our own energy consumption over to 100% renewable electricity, and to keep focusing on the role of money. But there was one really cool aspect of the bank that I must confess I didn't really get until after I'd been working there for a couple of months, and that's customer ownership. And so, yeah, when you become a customer of Bank Australia, you also become an owner. There are no external shareholders, and each customer has one share in the bank, regardless of how much money you've got in your account or how big your loan is. And this vote entitles our customers to vote at our AGM on matters like who's on our board or changes to the constitution. And as Camille mentioned in the introduction, like Bank Australia comes from a history of credit unions. So, you know, it started over 60 years ago, and since then a whole bunch of credit unions have merged together to become the institution that we are today. We became a bank in 2011, which we were the first customer-owned bank in Australia. Now there are quite a lot of them. And in 2015, we changed our name to Bank Australia. And interestingly, I think this history of so many mergers is actually what gave birth to the bank's sustainability journey a long time ago, all the way back in sort of 2003. I think credit unions had typically been formed based on profession, like the CSIRO scientists that got together to form the CSIRO credit union, or teachers that had formed Ed Credit, one of our predecessors. Or they were formed by location. So, you know, people living in northwestern Victoria, for example. And so what happened though, as these credit unions, you know, I guess over the years merged together and got bigger and bigger, was that these traditional ties that had been their reason for people to get together weren't there so much anymore. And so, you know, that in the early 2000s, we'd had a merger between two big credit unions to make an even bigger one. And that was, I guess, a point for the organisation to really do some soul searching and work out why it was that we still existed. What did all of these people that were part of this customer owned bank actually have in common anymore? And the result of that and engaging with customers around that was that, well, we realised that all of these people were quite socially aware, interested in environmental issues and being more sustainable, and also in doing things a little bit differently and being part of that collective. And so that's really what kicked off some of our early sustainability stuff. We started offsetting the emissions from every car loan that we finance, which is something we actually still do today. One of my absolutely favourite things that we do is that, you know, in 2008, we purchased the first of Bank Australia's conservation reserve properties. So Bank Australia owns out in Victoria's West Wimmera region a network of properties over 927 hectares now, on which we do we plant trees and do biodiverse conservation to protect particular threatened species on the reserve there. And I think that's a really great way to illustrate collective action. Like buying a private nature reserve of, you know, close to 1,000 hectares is something that's quite out of the reach of most of us as individuals, but the bank hearing individuals' concerns, acting on their behalf, and then putting that into action, that's something you can do with an organisation like that. And so I guess one of the things that we've worked on a lot during my time at Bank Australia is better harnessing that power of collective action to connect people with the role of their money. Just one example of that would be our responsible banking policy. So we did a big refresh of our responsible banking policy a couple of years ago, including being much clearer about our inclusion criteria, so what we do lend to, as well as our exclusion criteria, so where we don't lend. And as part of that, you know, we went through a sort of an extensive stakeholder consultation process and landed on what we thought was a pretty good list. But as a final step, we took this list of exclusion and inclusion criteria to a survey of over 3,500 customers to validate it. And we did that before taking it to our board for sign-off. And that was actually a really important part of putting it up to our board, is saying we've you know, consulted with our customers, we've validated it with our customers, and this is what they want to see us doing. So this is, I think, a really powerful way that we can be sure we're acting on what our customers care about when we make decisions about how we use their money. So I guess I wanted to just spend some time taking you through some of the major trends I'm seeing in banking and finance more broadly that are, making me optimistic now. So the first one is fossil fuel divestment. I think that the movement to divest from fossil fuels has been around for a while, but it is still really important. Not lending to the fossil fuel industry has been a point of differentiation for Bank Australia for a while, and unfortunately it still remains so at the moment. But, you know, pressure is growing, and I like to think that things are slowly shifting. And this is partly driven by corporate social responsibility considerations and partially simply by the emerging risk of stranded assets. We've probably all heard that term before, but just to recap, stranded assets refers to assets that lose their value because the world is transitioning to a low carbon economy. So for fossil fuel assets that are currently supposed to have a high value, they might not actually maintain that value once the world starts implementing policies that are in line with the Paris Agreement. And for investors and lenders, that becomes a problem if they've counted on the supposed original value of those assets when making the credit decisions or the investment decisions. And so the Carbon Tracker Initiative has done excellent work on this concept and analysing the risk of these stranded assets and raising awareness of potential implications for the financial system more broadly. If that's an area of interest for you, I'd highly recommend going and checking them out. So I guess on stranded assets, it's become pretty well established that phasing out thermal coal is going to happen. We've seen really major banks around the world and even in Australia announce plans to exit from thermal coal. A couple of Australia's major 4 banks have announced future dates for getting out of thermal coal, which is certainly a start. And it'll be interesting, I think, to see also how the stranded assets idea plays out for other fossil fuels like oil. I think with such intense price falls at the moment, you know, off the back of COVID-19, whether that will start to shift things more broadly as well. But I think, like, beyond the thermal coal commitments, unfortunately, the story is still not moving fast enough in Australia, I'd say. Australian-based NGO Market Forces recently released data showing that Australia's major banks have lent over $35 billion to fossil fuel projects since the Paris Agreement. And so I guess they've criticised these banks quite intensely for praising the Paris Agreement on one hand, while still continuing fossil fuel lending on the other. And this is where organisations like Market Forces can make a really big difference with their campaigning by mobilising people to make this a corporate social responsibility problem for the banks that do lend to fossil fuels. And I'll just quickly touch on how I see Bank Australia's role in that, I suppose, and what my theory of change is there. Because of the type of bank we are in our size, like Bank Australia was never going to be a lender to really major fossil fuel projects. So taking this position is honestly a bit of a no-brainer for us. Adani's not knocking at our door. But there's a really important piece around shifting community expectation, and for people to be able to put pressure on fossil fuel lenders and demand that they change, then there needs to be like a great, more responsible alternative that they can switch to. And that's where banks like Bank Australia and that sort of campaigning that Market Forces do actually can really make a difference by helping to just build the pressure that it's not okay to keep directing money towards projects and businesses that are just not compatible with a safe future for the planet. And so I guess on the more positive side, you know, green and sustainable finance is a growing trend as well. And I want to call out here that the major banks do a great deal of lending to large-scale renewables like wind farms. The fossil fuel lending still well outweighs renewable energy lending, but there's really a wealth of knowledge in the major banks around how we can finance the large-scale infrastructure part. Things get a bit trickier once you get into the clean energy space in buildings, particularly sort of medium-sized commercial property and residential. Around 23% of Australia's emissions are from buildings. And if you think about just the sheer number of buildings that are out there and all the individuals that have to make decisions to make them greener, that's a pretty big job. And I guess we at Bank Australia are working in a couple of ways to try to tackle clean energy there. In the commercial property space, one thing we do is funding upgrades to buildings via something called environmental upgrade agreements, which means that building owners can finance upgrades like solar or energy saving devices, usually without upfront costs, and then they can pay these back via a charge on their council rates. And this helps to overcome some of the barriers to businesses investing in clean energy. And in the residential space, we were really proud earlier this year to launch our Clean Energy Home Loan with investment from the Clean Energy Finance Corporation, which is the federal government-backed green bank, if you will. So the Clean Energy Finance Corporation will invest up to $60 million in Bank Australia to help fund a discount for customers who are buying or building a green home or making ambitious green upgrades to their homes like solar and battery, full insulation or double glazed windows. So these are two of our early Clean Energy Home Loan customers here in front of their 8.2-star home. They've got solar on their roof, they've got a hot water heat pump. They've got a really amazing home that is a great illustration of what you can do if you're building with intention. And so I think one of the things that I really hope we can achieve with the Clean Energy Home Loan is demonstrating that it can be done and that it's a type of product that other banks could adopt. I mean, us funding $60 million worth of green mortgages is great. There's a lot of carbon emissions that can be saved right there, but if you think of all the homes out there in Australia, there's certainly a need to go beyond that, I guess. And the other thing I should just touch on briefly with green and sustainable financing is just the explosion of green and sustainable bond markets. In Australia, all the major banks and several of the state government treasuries have issued green or sustainability bonds. And that means their bonds are linked to a specific pool of assets like a wind farm, low carbon transport, cycleways, low energy buildings, etc. So, as a bank, we need to buy bonds to manage our liquidity, like that, to make sure that we've always got enough cash on hand to comfortably meet our customers' needs. And we buy green or sustainable bonds wherever we can. Also, when we issue bonds, we do sustainability bonds. So for Bank Australia, we wanted to have our whole bond program in line with our values. And whenever we issue a bond, it's a sustainability bond that's linked to a pool of social and green loans. And I guess the next trend I wanted to touch on was just the proliferation of frameworks and principles and networks and initiatives related to sustainable finance. There are so many, which can be a little bit overwhelming at times. But I wanted to just share my up-close experience with one that's been really influential for Bank Australia, as well as touch on a couple of others. So the Global Alliance for Banking on Values is a network of banks around the world, around 60 banks committed to using the business of banking to do good stuff in the world. Bank Australia became the first Australian member back in 2014. And the GABV was started by Triodos, which is a bank based in the Netherlands. They're one of our hero banks. They finance almost exclusively things like clean energy, organic farming, social housing, cultural and arts projects. And the banks in the network are really diverse, ranging from those that do mostly commercial lending, like Triodos, to banks in emerging economies that mainly do microfinance. But the one thing we all have in common is having a commitment to triple bottom line at the centre of our business model. And it's a network that you have to be invited to or apply to join, and it's only for banks, with that sort of central commitment to values. So in practice, being a part of the GABV means that the CEOs and the board chairs of all the banks get together every year to discuss strategy and direction, and there are lots of communities of practice for employees to be involved with, ranging from risk and compliance to marketing and communications. I'm part of a group called the Metrics Community of Practice, and one of our main tasks is to complete an annual scorecard that tracks our progress on various elements of being a values-based bank and benchmarks it against other banks in the GABV. So I wanted to quickly just share an example of how this scorecard has helped us to be more ambitious as a bank. Across the board, we rate really well in the GABV scorecard. But a couple of years ago, we observed that I guess we weren't stacking up that well on the share of our assets with a positive benefit for people and planet. We have about 10% of our total assets that fall into this bucket, which is great compared to most banks in the world. But when we look at some of the other GABV banks and benchmark ourselves against them, some of them have over 50%, or Triodos, as I mentioned, has over 70%. And that sort of made us realise, well, we could be more ambitious there, And so being part of this network made us realise what was possible. And we last year at Bank Australia launched a new impact finance team to help us scale up our lending and investment with a positive impact for people and planet. So I joined this team and a couple of other people from within the bank. We've also brought in external people to really help grow this faster. And I think that's where I see, being part of some of these types of networks can really help the passionate people in the organisation also drive change and sort of point to things that are out there and be like, this is the thing, we can do this too. So in that vein, I'll also, I guess, just touch on the UNEP FI Principles for Responsible Banking. So yeah, these were launched recently by the United Nations Environment Programme Finance Initiative. It's a bit of a mouthful, but yeah, I think these principles are great. We've not yet signed up to them, but I really view them very positively. I think there are 6 principles, and unlike the GABV, they don't really mind where your bank is as a starting point, but they encourage you, I guess, to assess your alignment to and impact on the Paris Agreement and Sustainable Development Goals, and that's both your positive and negative impact. And then the next step there is to sort of set targets to improve on those and report publicly against them. They've got over 180 banks signed up now, and these range from some of the GABV members are also part of this, through to really big banks like Westpac or Citibank. I think ANZ and NAB are also signed up in Australia now, and I think this is really their power. While it's fantastic to have something like the GABV that connects values-based banks and makes them more ambitious, it's really important to have initiatives to move the mainstream too. And I really hope that the Principles for Responsible Banking can serve that well. The other framework that I want to just describe in a bit more detail is the impact management project. And driven by things like the GABV or the Principles for Responsible Banking, I think there's an ever increasing expectation that banks manage and measure their impact and then report on that. What's tricky though with reporting on non-financial information is that there are less, compared with financial information, there are much less clearly defined ways to report on things, ways to define things, ways to measure things. And so the impact management project has been, had this really ambitious goal of creating global consensus on managing and measuring impact. And they've brought together all types of organisations, like those that are working in trying to achieve positive impact themselves, as well as a large pool of investors and lenders that are trying to put money towards things that have impact, and philanthropists as well that are trying to actually do a pretty similar thing, just with a slightly different tool. And so the impact management project, if you haven't had a look at it, I highly recommend going and having a dig around. They've got really great and I'd say very generous resources. Like, their goal is to really get everybody just using these tools. One of the key sort of concepts that they put together is what the dimensions of impact are. So that is when deciding, how to think about what impacts you have. They get you to look at what the impact is, who's the impact happening to, how much of it is happening, what's the actual contribution of your initiative to that impact, as well as risks that that impact might not occur as planned. They've also got a really good tool, or I guess classification system for investors. So they separate out really well the impact of the underlying asset. So for example, if we're lending to a community housing project, that's the underlying asset, and the community housing thing is, you look at their impact as one thing. The other thing though is really about your contribution as an investor, and the contribution that your time and dollars really have, that you're putting into something. And so that starts from, like, I guess the lowest classification is given a 1, and that's sort of signalling that impact matters. And the example I would always give for that is talking about, say, investing in most green or sustainable bonds that are issued by government or a major bank. If Queensland Treasury Corporation decides to go and issue, a new green bond, we'll usually very happily want some of that, as will lots of other investors. And so, they're great assets to invest in, and we're really happy to do that, but it's not that our dollars are necessarily making the difference between that happening or not, if that makes sense. As you move kind of further down that level of investor contribution, you kind of get into engaging actively and really using your knowledge and expertise to make things happen, through it all the way to actually, providing a discount on the dollars. And, so that Clean Energy Home Loan is an example of that. Like, Clean Energy Finance Corporation and Bank Australia are actually providing cheaper finance for people that do that. And that's where you can kind of make an even greater contribution with your investor dollars. So I guess that is a really helpful framework for us. I think, in our impact finance team, we'll get a lot of commercial lending inquiries, and, my colleagues will often ask, is this impact? And that's a bit of a hard question to answer just off the top of your head, and you kind of get a bit of a feel for it, but it's nice to have a rigorous kind of framework for breaking down, what it is that we actually think about this, and is it going to have a positive, do we really genuinely believe it's going to have a positive impact? I've added a list there of a bunch of other initiatives that we are involved with, touch on, use. I'm not going to take you through all of them in detail because we'd be here till, mid-afternoon, but I guess just to signal that there's so much out there. Sometimes it makes me feel like my head is going to explode, trying to work out how to, which ones of these to do completely, which ones to just touch on and draw aspects from. I think a smallish organisation like Bank Australia needs to grapple with that a little bit, of how much, with our limited resources, can we do all of these things and do them well. But it's also a challenge in larger organisations as well. But I think despite that, the amount of progress I've seen in this space, and the sets of really useful, helpful principles the really positive networks that I've seen emerge over the last few years are absolutely a source for hope for the future, I would say. And I guess that brings me to the final trend that I wanted to talk about, which was just people power. So I mentioned at Bank Australia that we've been working to try to connect the strength of our customers' collective action with the role of their money. And yeah, at the end of 2018, we launched our Clean Money Positioning, which is all about encouraging people to understand what their bank does with their money. I told you about my own experience, realizing that my money was doing more than just sitting in the bank. And it's been really great seeing that just click for so many more people over the last few years. And I think there's so much power in that. There are also super funds out there, and Camille, I think you mentioned you had Future Super recently, but Future Super or Australian Ethical telling a similar story, which just helps to build that narrative and help people to really understand that, that their role in all of this. But, I feel like we're very much still just at the tip of the iceberg. On the campaigning organisation side of things, I think organisations like Market Forces, 350.org or the AYCC, the Australian Youth Climate Coalition, have done a great job raising awareness of fossil fuel divestment. And it's interesting seeing, I think, this type of thinking also moving into other sectors. For example, Animals Australia has recently encouraged its supporters to start asking more questions of banks. Bank Australia's responsible banking policy sets out that we don't lend to live animal export or intensive farming. But, lots of banks don't actually have public information available on that yet. So it'll be really interesting to see how that develops. Similarly, the Don't Bank on the Bomb campaign, which is about, anti-nuclear proliferation, they are trying to publish lists of organisations that do lend to nuclear weapons, and as well as those that have made commitments not to. So I think for us, having this really clear, responsible banking policy that rules out a bunch of stuff has, brought us into contact with a lot of organisations that are trying within their own movements to build that awareness of the money thing. So I guess then, yeah, coming back to the initial question, can your bank account save the world? I think you can certainly have some impact if you take the time to understand your money and what your bank does and doesn't lend to or invest in. You can have a lot more impact if you take the time to make your voice heard in conjunction with that. So, if you don't know what your bank does with your money, ask. And if you don't like the answer, be sure to let them know. I think, consider switching. And if you do, let your old bank know why. If you are with a bank like Bank Australia that puts a really strong focus on customer engagement, participate if we're doing a survey, vote and ask a question at our AGM, or write to us if there's something that you're really passionate about. Write to your bank, write to your super fund. Like those things do get read and counted, and things take time, but bothering to raise your voice can really make a difference. I think that the more people who realise it's our money that shapes the world, the more change we can make. And so I guess, Camille, I've seen a few questions popping up there, but I haven't had oversight of what they are. Did you want to?
What wonderful, Jane. Well done on your presentation. Really thorough. I love that you went through the frameworks, but then we, I guess, explored the customer side of things. So, and I often find myself difficult explaining how individual actions can actually make an impact on the system, and I think you've done that brilliantly. Yes, we had lots of questions. People seem to be quite passionate about the topic, so that's awesome. I will read a few to you now, sure. If that's okay.
Yeah.
So let's go back to bonds. So someone asked, can customers invest in your sustainability bonds or other green bonds through the bank, or is that essentially just corporate banking activities?
Yeah, so look, that is a really good question, which we do get sometimes. So bonds, our bond program and most banks' bond programs are open to wholesale investors only. So that is largely institutions or sophisticated investors. So unfortunately, that isn't something that is available to retail customers at the moment. I think it is a really interesting question, though, about how to have, you know, a similar type of linkage between assets and you know, between the impact assets and people's money. I think I've seen some actually really interesting examples from GABV banks where they have things called attribution accounts. One in France, Crédit Coopératif, has like an account that you can nominate whether you want your funds to be directed towards you know, sustainable, you know, green projects, social projects, or I think they also have a regional one. They used to, in any case. Yeah, which I think if you say I want this to be invested in the northern region of France, then you can actually direct your money towards those things.
Yeah, that's true. I think that's Crédit Agricole, maybe.
Oh,
yeah.
okay. Okay. Yeah, so I think it is on our mind what we would be able to do, and we are looking at examples around there of how you'd be able to have something similar, of putting people's funds towards specific assets like you do with a bond, but the structure and the size of the funding that we need to raise, it has to be from wholesale markets. Thank
you, Jane. I have another one for you. So someone asked about the neobanks trends. So I think the last 2 years, at the very least, we saw lots of neobanks popping up, all with a promise of a fantastic digital experience or any other promises, I guess. How do you see Bank Australia in that landscape? Do you see yourself different? What do you think about this trend?
I think that's a really good and interesting question, and one that we've debated a lot internally. Is it neobanks? Is this a problem, or is this is this a good challenge? Yeah. I think two things. So we definitely recognise that we need to be investing in our digital experience. So Bank Australia, most of the credit unions that have merged in together were Victorian based. We do have some in Queensland, some in New South Wales, but the large majority of our branch footprint as a result of that is Victorian based. But 5 years ago, in becoming Bank Australia, we realised that our ambition was bigger than that, and that with the way that the world is changing, that it didn't necessarily mean opening a branch on every high street in the country. It meant probably moving towards a better digital experience. We've taken great strides towards that in the last 5 years, but we've still got a way to go, to be honest. But that is actually a really important part of our strategy going forward. I think, though, with the neobank side of things, that while the user experience is really good, the reason we're seeing most people switch to Bank Australia is based on values. Our digital experience is pretty good. It's probably not as good as some of what those neobanks are, but switching banks is hard. And it's something that people really need motivation to do. And I think that with the customer growth that we've been seeing in the last couple of years of people clicking on this clean money thing is huge. And so I think we think that values, we believe that values proposition and being a values-led digital-first bank is going to be the way of the future for us. So the neobanks, I think, pose a really exciting challenge in letting us know we need to get better in that space. But I think for us, at least, the way of the future is that values piece.
Yeah, that makes sense. We have lots of other questions. I might invite Maya to ask her question directly. Maya, can you unmute yourself?
Thanks, Camille. Yeah, so my question is just about why do so many individuals still struggle to make the connection between the impact that their money can have on climate change? Because I think there's a large majority of people who don't make that connection.
Yeah, no, look, you're absolutely right. And, you know, I said when I was talking about my own experience, that when I look back now to only 7 years ago, when I know that that light bulb went off for me, it feels really naive to be like, well, I don't know, I just thought that my bank gave me cards that I could pay with, and I don't know, I just don't think that people actually ever take that step further and think about it. Why people haven't all realized that immediately, I don't know, like life's busy. There are a lot of things going on, I suppose. So it's not necessarily like banking and superannuation are not things that people think about every day. I think if you think about superannuation and how many people are like, oh, I should consolidate all my accounts into one, like, you know, if that's too hard, then no wonder we're maybe not taking that next step, you know. But like I said, I think when it does click for people, it's so powerful. And so that's one of, I think, the reasons that we've sort of, when we started on this clean money positioning, we were like, this is actually something, you know, this is an idea that has real power, and we want to, you know, stick with this and really work on it over a long period of time. Our early research really did uncover that, like that there was just the first piece of it needed to just be education around, like, do you know what your bank does with your money? And there are lots of people like, well, I don't know, you know, never really thought about it. So yeah, I think it's just something that as a society we haven't talked about in great detail yet, but that's where I see a whole lot of opportunity.
Thank you, Jane. Great response. We have a question from David. David, feel free to unmute yourself and ask Jane directly.
Hi, Jane. Thanks so much. Really fantastic talk. Should responsible banks and sustainable investors be holding government bonds when there are huge subsidies for fossil fuels and the Queensland and Australian government support the Adani coal mine?
Look, that's actually a really excellent question. Thanks, David. I touched briefly on our need to manage our liquidity as a bank. So we need to hold bonds. So I guess, you know, what a bank does with your money, a large portion of that gets loaned out to other customers to enable them to do things. But part of it needs to be on hand as cash or easily convertible into cash at any stage to make sure that we can really comfortably meet our customers' needs with lots of buffer at any stage. And so one of the things that we do need to invest in is bonds there from really secure issuers. And so for us, that is a really big tension, because we need to, they're like, what you can really invest in is government or major banks. What we made the really clear decision to do, you know, a couple of years ago was to try to transform as much of our liquidity portfolio into green and sustainable bonds as possible. Because I guess there you get the promise around the use of proceeds. So you get what's called like an eligible asset pool that tells you that your funds are being ring-fenced towards this particular pool of projects. So I guess that's the best solution that we have found to managing our obligations as a regulated financial institution with our values.
Thank you, Jane. Yeah, impact is complex, right?
Oh, once you pull the thread, we have some really fantastic conversations that go on for hours.
Yeah, exactly. I have another question on the commercial side of the bank. So V asked, I can see that you offer commercial loans as well. Are businesses required to be committed to sustainability in order to borrow from Bank Australia?
Look, that is a very good question. And so as a basis of everything that we do, we have Bank Australia's responsible banking policy. And so there are a range of sectors that we blanket rule out: fossil fuels, intensive farming, live export, weapons, gambling and tobacco. So anything that is within those sectors gets ruled out immediately, regardless of commitment to sustainability. So one example that has come across our desks before is, oh, this business would like to put solar farms on the roof, but it's solar panels on the roof. Oh, great, you know, we love solar panels, but it's an intensive chicken farm. So for us, that there falls outside of what we can do within our responsible banking policy, and that's a loan that we didn't proceed with. As far as commitment to sustainability goes, yes, we absolutely look for that, and we do sort of environmental, social governance due diligence on our borrowers. But I guess it's a bit of a borrower-specific thing that we need to look at. So we, as a business, our commercial lending, you know, we really only seek to do impact lending. So we'll often sort of look at something and say, oh, you know, is that really having enough positive impact? Do we want to do that, or is it not for us? But, you know, even within that, there is, you know, there's complexity again of, you know, commitment to sustainability. You know, does this great organisation doing nice things over here have enough gender diversity on its board, or any other kind of diversity? Or does this organisation doing great social stuff have enough environmental credentials? So it is something we're absolutely mindful of. We do have a few no-go areas, and within that, there's a lot of grey that we have policies and robust discussions about what we should do. But I guess internally, you know, we've got our own impact finance team where we sort of throw things around as a first step. We also have an executive responsible banking committee, so all of our executives are on this sort of oversight committee of this. So for ones that we're actually not sure about, we've also sort of got that escalation option there to make decisions.
Thank you, Jane. That was a really transparent answer. Appreciate it. We have a question about customers. So sustainability seems to work better when consumers are closely connected to their impacts, you said. With Bank Australia having consolidated so many smaller credit unions, is there some thinking or strategy around creating localized connections between members?
Yeah, kind of. We have sort of talked about that before, and we have identified that need via some of our customer research, because I think people kind of see. We did this amazing design thinking research project where customers got to like be involved and do sort of out of the box stuff, where they like drew pictures and had pom-poms and got to do craft about the bank. And one of my favorite ones was this this customer who drew this picture of sort of 3 circles of you know, the really local community, and then the broader one, and then the planet, you know, the broader society, and then the planet. And that really helped us, I think, to identify this need for us to be doing more at the local community level. And we have sort of started talking with our branches where we do have a footprint about what they could be doing in their local communities, and thinking about ways to empower them. One just really nice thing that we do, so Bank Australia has the Bank Australia Impact Fund, so 4% of our after-tax profits every year go into the Bank Australia Impact Fund to fund social and environmental projects. And one really successful aspect of that is just our customer grants program. So they're our organisational customers, and they can be not-for-profits or actually social enterprises or things, can apply for grants of up to $10,000. So and that's created really great community connection in a lot of places. I think we have a lot of organisations that bank with us that are just do amazing things in the community, and they're often really quite small. And for them, like a grant of $10,000 makes, you know, can make a really huge difference, and they can do great stuff with that. And that's sort of one of the big ways that we try to empower local community at the moment.
That's great. Yeah, Jane, this is a great support to social entrepreneurs. That I heard of the fund before, and I think there's brilliant examples on your website if people want to look at it.
Yeah, we just announced this year's grants a couple of days ago, so there are some lovely projects on there. Yeah.
Oh, wonderful. We'll have a look then. On that topic, it's a perfect segue because we have another question related to businesses. So someone is asking, I would be keen to hear how much Bank Australia focuses on supporting sustainable businesses. Are you, for example, considering providing merchant facilities at some point? Yeah,
that is a really, business banking is the thorn in our side sometimes. So look, we are often thinking about we're often thinking about this because we do get approached by a lot of values aligned businesses that want to bank with us. And look, we do bank a lot of values aligned businesses that want to bank with us. But we don't have the full service offering like merchant facilities at the moment. I think, yeah, so look, our strategy has been very much to focus on our impact finance lending, as well as business banking that we can do within the current banking system that we have. I think it will be interesting to see with the merchant facilities over the next couple of years. There are a lot of emerging, speaking of emerging kind of fintechy stuff, we have a few customers that are choosing to bank with us and go around the traditional merchant facilities using some of the other sort of either pay devices or apps that are available. So yeah, we don't have concrete plans to offer merchant facilities in the really clear future, but it is definitely something that we are thinking about and observing and trying to work out how we could be doing the best we can for values aligned businesses.
Thank you, Jane. I have a couple more questions. We've got, I guess, 4 minutes before we wrap up. So please, everyone, if you have one burning question, make sure you post it on the chat, and I will ask Jane. Otherwise, I will selfishly ask my own questions. I would love to circle back to what you said about our responsibility as customers to be mindful of where our money is invested through our banking choices. So can you tell us more about how we can start this process as consumers? How do we find out where the money is invested? That sounds really complicated and bothersome. Is there like a quick and easy way to find out?
Look, in some topics there are, so I mentioned the organisation market forces, for example, that try to make that quick and easy with respect to fossil fuels. So they do a lot of detailed analysis on super funds and banks, and you can go to their website and look up your bank to see whether they invest in fossil fuels, whether they've got plans to get out of anything, whether they have made any statements saying that they don't. So if you care about some particular issues, yes, there is an easy way. And another tool that is good, is probably better for superannuation than banking, but the Responsible Investment Association of Australasia, RIA, has a consumer-facing website called Responsible Returns. So if you Google Responsible Returns, that comes up. So we are certified, like our full range of deposit and loan products are certified by RIA. There aren't many other banks that have that. So Teachers Mutual Bank is probably the other main one. But there are a lot of super funds and other sort of managed investments that are on there. And there you can actually search by, I definitely want to exclude armaments and fossil fuels, but I would like to have social housing and clean energy, for example, and that will tell you, like, it will bring up based on your search criteria ones that meet that. Once you then, beyond that, you kind of need to go digging a little bit. So for us, we publish our responsible banking policy on our website, and a lot of organisations actually do have that. A lot of banks actually do have some of their environmental social governance policies, and that published there if you go looking for them. If you start searching under things like about us and sustainability and governance, you'll get to that type of thing. The major banks are doing really good reporting now around their lending to energy, and that includes both fossil fuel and renewable energy. That type of information gets published in detail each year in their annual report or their annual sustainability report. So I love sustainability reporting, so I'm happy to read through those for a bit, but I appreciate that you can also just bring up the PDF and find and search and that sort of thing. But I think, back to that earlier point around asking as well, like it's good to go and look for publicly available information, but asking the question is a powerful thing to do. If I think about, so I mentioned that our responsible banking policy screens out intensive animal farming and live export. One of the things that got us on that path in the first place was actually just a sustained volume of customer questions about that. So, just through our website, feedback form. Like we would regularly get questions sent through from our contact centre saying, what's our answer for this? You know.
It's great to hear that, because as consumers, I guess we feel like, you know, one small email, what can it do? You know, we feel powerless, but in fact, it's good to hear that banks actually look closely at those kind of things.
Yeah. And look, I think Bank Australia, you know, as everything I've sort of said about being customer owned, like we are potentially more attuned to that than other banks, but it's not that you're like, it can, like I said, it can take a while for your message to get through. You might not get a super satisfactory answer when you email their contact centre about this, but asking the question, from my experience from within the bank, I see how that they get counted and filtered through, and it does. I think it's a worthwhile thing to do with you know, half an hour of your time.
Wonderful.
If you're in
Thank
lockdown,
you. Especially if you're in lockdown, why not writing to your bank? This is all we have time for today. So I'm going to just say a few words to wrap up. But Jane, thank you so much for this great presentation and taking the time to answer all these questions in such detail and with such transparency. Really well done, and thank you. So everyone, dear members, your homework after today will take you 5 minutes. Have a look at what your banking, how your bank is doing in terms of impact. Now you have all the knowledge to act and be curious. I would like to thank you all for coming today and making the time and commitment to learn and be curious about these topics. They are niche, they sound complex, but like James said, there is power in us coming together and sharing knowledge to make a difference. My goal with these webinars is to make sustainable finance fun, useful and accessible. So if you have any feedback, good or bad, please let me know, reach out and tell me how I can improve and how we can make these sessions even better. Make sure you follow us on social media. We are Bloom_Impact. You can follow us on all your favorite channels. We have a lot of events, a lot of brilliant speakers coming up. So make sure you check our meetup page. Our 2 next events will be on cleantech, how to invest in cleantech. That should be a good one. And we'll also be talking about ESG trends. So I hope to see you all there. And otherwise, have a wonderful day, everyone. And I look forward to seeing you next time. Thank you so much, Jane. Do you want to say a final word? Or? Thank you so much, Jane. Can you hear?